2010, a very strong year, a recovery year. And for more on what we can expect in the new year, we're going to bring in right now Frank Aquila. He is a partner at Sullivan Cromwell. He was named a 2009 Dealmaker of the Year by American Lawyer. He was also the 2010 Atlas Award recipient for Global M&A, and he is with us now on the phone. Frank, thanks so much for being with us this morning. We know that 2010 was a bit of surprise, at least to us not in the business. How do you see trends going for the new year?
Deirdre, all the trends really are headed in the right direction in terms of M&A. To a certain extent, what you've seen over the last really few months, I mean, August was a very strong month for M&A. It led into a strong fall, and even through the last few weeks of December, we've been seeing lots of different transactions, both in the U.S. and abroad. And with the cash that companies have on their books, roughly $3 trillion for the largest public companies in the world, plus the access to credit, it really, for that and other reasons, is looking like it's going to be a very strong year for M&A.
So, Frank, I mean, you mentioned cash, and we know that companies still have that, but what about confidence? Because that has to be there, too.
Deirdre, that's really a very good point, because a year ago at this time we could have pointed to a lot of cash, not as much as there is today, and a lot of availability of credit. But what was really lacking, and it particularly when you had the sovereign debt crisis and some of the problems with the euro earlier in the year and the shaky economy, business leaders were not prepared to commit. And I think what we're seeing is, whether it's retail sales over the holiday, business confidence, consumer confidence generally, is that business leaders, boards of directors have that confidence, and to a certain extent, they've spent 2-3 years cutting costs, and that's how they've achieved the numbers that they have. But to a certain extent, that's done with, that sort of cost cutting. Now what they're looking for is growth, particularly revenue growth. And if you can't get that revenue growth organically through the growth of the business, then the way to get that growth, both geographically and with respect to revenue, are these sorts of strategic acquisitions.
So if the cost-cutting work is done, then, Frank, as you say, we're going to see a lot more strategic acquisitions and non-organic growth in the new year, which somehow seems healthier. Would you define it that way?
I think you can take both sides of that argument. However, what's really clear is you've not had a sustained stock market boom, at least in the U.S., but I think in most other major markets, without a strong M&A market. They really do seem to go hand in hand. And I think the gains that have been made in the equity markets, if you look towards an M&A boom next year, that means good things for the markets generally, or at least historically it's meant good things for the markets generally.
Frank, thanks so much for the time. We wish you a happy new year. Frank Aquila joining us there from Sullivan and Cromwell.